Well, good morning, everybody. What a day we had yesterday. Last day of the month here, February 28th, about 9:15 in the morning. And title of the video is Can We Stay Below or Do We Stay Below the Lower Mid? Man, I am a loss for words. Yesterday that was such an awesome day. For men, just the technicals of it, really the levels that played out. And I just want to actually delete some of these draws I have. So yesterday, as we were going into the open, there was yesterday's or what was Wednesday's premium level. We were basically right at it. It was a 21,356, which I had mentioned. I thought maybe there was a chance we'd get up to the 50 and drop, but we were holding that resistance for an hour going into the bell. And basically, the first sell signal that I saw, I took, and we went straight down and did not bounce until the premium zone that I had for the NQ, and that was 20,933, and that produced what, like 200 point rally. Incredible. It produced a 200 point rally in like 30 minutes, or maybe even less than that. That premium level or discount zone that I had from the prior day actually was an old negative 100 from the pullback, the counter trend pullback here on Monday. That's where I got that level. And then when we actually went completely through that, I drew, and this was kind of the last thing I did before yesterday, what was Monday's low to low. And that's going to be important moving forward. But we basically stuck that. There was other variations here. You could argue it was the full halfway back short. I'm sure there was some sellers there as well. But you could see how technical the extension was from Monday's low to low. And really moving forward, that is going to be important. Really moving forward, that is going to be an important anchor. So if you can see the overnight lows are basically at that negative 61. If we draw this to the new low, the overnight low, yesterday's midpoint is that 50% retracement, and that is going to be a battle zone. If we're going to, we really should not be breaking above this if we're going to continue in this very aggressive trend to the downside. Okay, so I want to be aware of that extension, and I'm just gonna I usually put arrows where anchors are. I'm not sure I want to keep that on my screen as of right now, just because it's a little much. But the controlled anchor, which was still from this 10:45 a.m. going back to Friday of last week, that ended up completing its negative 23% profit target and moving down to and through. There is absolutely going to be, this is where you have a couple of different anchors. Here, there is going to be that as a possibility. And what I want to do is that lower midpoint. If you guys remember last week when the sell-off began, we were below the lower mid, and there really wasn't, there was counter trends maybe on Tuesday, but yesterday, once we lost that lower mid, we stayed below it. And here in the overnight session, we haven't even come close to it. So if I'm taking Tuesday's low at this point in time to the overnight low, that 50% retracement is going to be this 20,761. And for the bears, I really want to see them keep it below that. That would, if we can stay below this all day long, then Monday is going to be bad. But if we break this extension today, get above that lower mid, then I do think you're going to have that opportunity to look for pullbacks, and maybe this is just a swing low. Now, there's a variation of support that I have here, but I don't want to go reaching for support at this point in time without a trend break. We are still on lows. We very well could squeeze, but instead I'd rather anticipate where could we potentially go that would move us lower and trigger maybe more short covering. In my discount zone here today, move this down. Let me delete this first. Is going to be an old negative 61. An old negative 61, and that's a 20,410. That is the negative 61 of the extension from Wednesday and Tuesday and Thursday morning. Okay, so ideally, if I am going to look for a long here, I still want to see a push through those overnight lows into that level. And at that point in time, I'm willing to look for a potential long signal. So that's the first zone I'm going to come in here and create an alert at for a potential reversal signal. Now, if we go out to the daily chart, remember we were in this September 11th extension for months, okay, basically since the election. And yesterday was really the stopwash of that. We haven't quite broken the 61, but if I'm looking at where we could fall below, the traditional out of the lows of September, that low to high is also going to be right at that discount zone I have. Okay, it's going to be right at that discount zone I have. Now, a lot of times when we break these 61s, there is a bid from the 50 to high. That's actually where we're getting the accumulation in the overnight low, is from this 50 to high. But the confluence of the September lows to highs, as well as the negative 61 of the current extension draw, and then you got this prior low liquidity here from November, is really my favorite level. Now, do we always get it? No. But if we do, I know what I want to do. So I'm going to try to be patient, really, for that zone here and see if we can continue. Now, you could even make the argument that yesterday's 10 a.m. low to low is holding in the overnight session. We've barely gotten an aggressive bid. Now, once again, if we come up, trade up through this lower mid, then I would expect us to rotate to the mid. So if we can get some buyers above the lower mid, I expect in some form or fashion we make it to the midpoint. That would be the goal. But as long as we're below that lower mid, we're holding the most aggressive extension series. There's still targets pointing lower. I'm in no eager situation to want to go long. Now, if we break this, then okay, I'll be looking for pullbacks. But that is going to be what I have here today. This lower mid I'm going to be treating as a premium zone. The extension from Tuesday's low to low is going to line up with that. And if that breaks, I would imagine that'll be, right around maybe after lunchtime, maybe the first hour, who knows, after we saw what happened yesterday. But what happened yesterday, that type of breakdown, the extensions to target, in the history of my memory, doesn't really lead to extremely hard reversals. That type of breakdown, especially considering the multi-month structure into it, that September 11th high to high. I mean, that was a multi-month extension that is basically now broken, and I still think needs to resolve to the downside. Maybe to the point where we actually come, and I said this in a trade plan previously, but we might come halfway back from the lows of August before finding any major support, and that would be 19, right, let's just below 20,000. Okay, so that's what I have here. Remember, guys, these ranges are big. These candles are large. Probably going to be some more of the same. But yesterday we had 100 plus point 100. Here's 138 in 5 minutes. There's 128 in 5 minutes. Once we started breaking down, it was just, I wasn't here for the end of the day, but my goodness, what a waterfall that we had. So if we break this extension, maybe we get that squeeze up, but I don't see us getting really much past this 20,985 area for the NASDAQ. For the S&P, interesting enough, we're right back at that September 11th extension that's traded first on the 20th of December. Then we came down the 10th of January, traded it the next day, the following day, rallied back to highs, failed again, all the way back to the bottom of the range. Here we are again. If this extension doesn't end up holding, the next support level I really have below us is the traditional from the lows of September 6th, and maybe that's where we're going. Um, but on the smaller time frame, yesterday we were at that premium. And actually, the ES was losing it before the NQ, and that kind of gave me. We were getting sold pretty aggressively at 8:45 yesterday in the morning before the Nasdaq was. If you look at the Nasdaq was kind of like still sideways at that point in time, but the ES was getting sold. We bounced up back to the top, immediately got crushed down through the midpoint, and then that acted as resistance. You can see we literally lost it. Resistance, 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 and then between the lower mid here, this green line, we have not broken back above it. Now, the most aggressive sequence would be the 10 a.m. low to low here, and I'm going to draw that just because if that's what's holding, we want to be aware of where those targets are. Now, the ES is bouncing harder than the Nasdaq. I would not be surprised whatsoever to see this ES break here. But what also I'd like to pay attention to is if we can get down to this negative 61, whether it be today or next week. That's the negative 61 of the Wednesday, Thursday draw. That would be a very big potential reversal point. Otherwise, if we are going to stage a rally here today, I'm going to use the same extension that we've been inside of. We're going to adjust it to the new low since we have completed profit targets. The 38% retracement would be a 59.51 half roughly. And that's quite a bit of ways above us. But if we got up there, I'd shut off the long spigot for quite some time. But really almost with yesterday's range, those premium discount levels were wide, but every single one of them provided, a great opportunity. So 9:45 news. Probably going to let that play out before I make any major decisions. It's going to either stop the shorts. This overnight range is so tight. After 9:45, we're taking out one side or the other, and then I'll be making a decision based on that. I'm really going to try not to be overly aggressive off this open because I don't really think we're any great trade location currently for a bigger move at least. Which there's bigger moves on the table, so I want to wait for entries that I think we can get some of those bigger moves off of. Now, with that being said, I'll share these levels with you guys in the room, and we'll take it to the squawk.